All right, let's go ahead and get this started. Welcome to the second video of the playbook. We are covering today supply and demand zones at the 1 hour. So we're looking at the second step here in the playbook. It is the 1 hour time frame supply and demand zones. And there's going to be different steps within the second rule of the playbook. So each step of the playbook, underneath every step will be underneath every rule, there will be certain steps that you guys got to follow in regards to this plan here. Now, for the 1 hour supply and demand zones, we have an order block or an imbalance. So let's first begin with this. What is supply? What is demand? What is a support resistance? What is the difference? A lot of traders get this confused. Supply and demand zones, let's start with that. A supply zone, it's an area where selling pressure is strong and price often reverses downward when it returns to the zone. So this is an area where large institutions, central banks, traders are unloading positions. Now, a demand zone, it's an area where buying pressure is strong. Large institutions and traders are accumulating these positions, and price often reverses upward when it revisits the zone. So that is supply and demand zone. I'll be drawing the zones here in a bit. Now, these zones are usually drawn around candlestick bases where big moves originated, sharp rallies or drops. Now we're looking at gold here at the 1 hour. We're going to be going to the 1 hour on gold, and I'll be showing a couple of examples with different asset pairs. But here we're looking at gold at the 1 hour. So we're going to be going down the time frame. So on our last call, we went over market direction. If you guys haven't seen the first video, I highly recommend you guys go back to the first video on the playlist for the playbook and begin watching the first video. You do not want to skip ahead and skip to other videos without completing the first video. Go step by step so that way it makes more sense. Now, if you guys haven't watched the video, go back and watch the first video going over market direction. I went over that information on that video. Now, this video, we're going to be talking about supply and demand zones at the 1 hour. So here on gold, we're looking at gold here. Now, gold, we're looking at live analysis. Gold made a bullish move to the upside because we had news. We had a conference, the Jackson Hole Symposium this past Friday, that resulted a bullish move to the upside on all asset pairs because they're predicting that they're going to cut down rates. Most likely, they're going to cut rates coming September, and that is going to be bullish on all asset pairs. It's going to be bearish on the dollar, but that's another conversation for another day. Today, we're going to be talking about supply and demand. Now, let's spot at some supply zones, right? Supply zones, we can look at areas where there are supply happening, high supply happening. Okay, so we can see here, if we look to the left, we can see an area where price has been pushing down. All right, here we have price pushing down, causing a downward move and creating an imbalance. Now, whenever you see supply and demand zones, you want to see an area where there's imbalances or order blocks. And I pointed out here OB stands for order block. IMB stands for imbalance. So an area where there's either an order block or an imbalance happening, it's an area of selling pressure that is strong. And when price reaches that zone, that area, price often reverses downward when it returns to the zone. And I'll show you guys here an example. Now we look back, we have this imbalance here. This imbalance candle right here. Why is it an imbalance? Because there's a gap. Whenever you see a gap happening in the market, right, you have this gap right here that price hasn't filled up this gap. Price instead continued to push downward and hasn't and it hasn't filled this gap yet. You see how price is now trending up. Why? Because we have an imbalance here and price is slowly coming back up to fill this gap because this was a selling order from the institutions that was left unfilled. And I'll do my best to break this down at the most fundamental way. And the more you backtest, the more you study this, you study order blocks and imbalances. Here, an imbalance is just a candle, a candlestick that is an order that was left unfilled and it created an imbalance here. It's a gap. Compare to other candles where the gaps has been filled, such as here, right? The gaps has been filled because price came back to return back to this area to fill this gap, right? So these are, sorry about that, these are called uh, filled gaps, filled imbalance, filled candlesticks, filled gaps that has been filled in the market. So it's an invalid order block or an imbalance. It's not a valid order block nor an imbalance. Same thing here. Price pushed down here, left an imbalance at some point, but eventually price came up to fill this gap. So therefore, this is an invalid order block or an imbalance. So let's see here. So now that we know this is an imbalance, we can draw a zone here. We can also look for order blocks. This is an example of an order block. So currently price is filling this area. See, there's an order block right here, left an imbalance. So therefore, we can draw we can draw a rectangle. I can color this red because it's the supply zone. Here, from wick to wick. We want to draw the rectangles from wick to wick. From this wick, from the high wick to the lower wick. The candle previously, the previous candle before the drop. So you want to look, if you guys want to look for an order block, you guys want to look at the candle that has liquidated. You see here, price liquidated here. This was money here. And this candlestick came down to liquidate this, all these orders. And also up here. So when you see a candle that liquidated and broke a structure and left an imbalance, now this candlestick is considered an order block. So when you see this, you draw a rectangle, and then you see price now is coming back to this area to retest. Now this is considered a supply zone. This is where it's an area where there is selling pressure. The selling pressure is strong, and where large institutions are unloading positions. Now, price often reverses downward when it returns to the zone. You see how price now is coming back up to this supply zone, and now it is moving downward. It is retesting this area. Same thing that happened here. So we have touches here and here and here. So we have three different touches on the zone. If you're to draw your zone here, and at one point price came to retest this area, and once it did, immediately it pushed down for a sell. It came up again and pushed down. You see price, because this is a strong area for a supply. Now you guys want to look for a zone where there's imbalances, such as here. There's an imbalance here. It left a gap, and eventually price came up to fill this gap. At one point it left this gap, and then price came back up to fill it and touch this area to afford continuation to the downside. Same thing with a demand zone. Now for a demand is the opposite. You guys want to look for an area where there's buying pressure. The buying pressure is strong, and it's building up liquidity, and it's also accumulation phase, right? Price often reverses upward when it revisits the zone. So we have a perfect example here when price created this huge imbalance. This is an imbalance candle. This huge bullish engulfing candle is an imbalance. Price never came back down to fill this gap. So we have an imbalance here, and we have this gap in the middle. Price hasn't come down to fill this gap yet. It is still around this area in the supply zone. Now, when we see this move, we can spot an imbalance, and we also see an order block right here. This red candle, this red bearish candle before the big move up is considered an order block. An order block, it's a candle that is that was left that liquidated, right? The previous candles before that. We see here, this was liquidity here. And price push downward to liquidate these sellers and buyers. right? These orders, this candle resulted a push down to liquidate before the big move up. So when you see this and it creates an imbalance here, right? It creates this imbalance. It is considered a valid order block. Now you guys can also take this, draw a zone here from wick to wick. To draw out the demand zone. And I like to color this blue for demand. Now this is an area where there's buyers, right? There's buyers. There's high buying pressure. And price will eventually come down to fill this gap and retest this area before the continuation to the upside. So right now it's testing the supply zone here. You see price is currently testing this area here. Now these are examples of supply and demand. Supply is in red and demand is in blue. I'm going to draw here. Just going to type it in supply zone. And this is a demand zone. Let's look for another example of a demand zone here. This is invalid demand zone. This is not considered a demand zone or an order block, right? Because price, you see this candle, this bearish candlestick here, the candle before that liquidated this candlestick. So when you see this, it is an invalid order block. This is not considered an order block, nor an imbalance. So this is not considered an imbalance. Why? Because if you guys look at the wicks, if you guys look at the lower and upper shadows, it is already filled. You see, there's no gap. There's no gap in the market. But this could be, however, this could be considered a support. It's support price, a support. You can draw a support line here because it's a specific price. Now, when it comes down to support and resistance, the difference is that a support is a specific price level where buying interest historically prevents price from falling lower. And a resistance is a specific price level where selling interest historically prevents price from going higher. Think of them as horizontal lines rather than broader zones, like you see in supply and demand. Now, support and resistance, you can just draw out a horizontal line, right? This is considered a support. This is a support. And you can type in a specific price, right? Especially for gold, you can just round it up to the nearest whole number. Or see here, every $5. There you go. That could be a support zone right there at 33.15. Same thing with a resistance here. We can put a resistance line at 33.75. 33.75. Now for gold, and we can talk about this as well and on future calls, I'll be going over the key levels for gold. Every $5 price tends to react on these key levels and also quarter levels. So every $5, every $10, every $25, every 5, 10, $25, price tends to react on these price levels, on these key levels with gold. As you can see here, price is reacting at this resistance price, at this resistance level, 33.75. You see here how price touched here, gave me this wick, and it dropped down. It was reacting around this price. And on top of that, it's a supply zone. So it's very sensitive around this area. So you have the resistance at 33.75, and then you have the supply zone around that. It's an area of high selling pressure. So price tends to react around this area and around this price. Now it's pushing down. And push down here. You see here, price touched this price and it gave me this wick. And this wick, this upper shadow is just liquidity and drove price down. Now that is the difference between support and resistance, between support resistance and supply and demand. Remember, guys, supply zones are an area where there's selling pressure. The selling pressure is strong. And typically it's a zone where there's big players that are entering or exiting the market and where imbalances exist or order blocks, just like I showed you guys here. And demand zone, it's an area where there's high buying pressure and it resulted in this bullish candlestick, this high buying pressure, and also resulted in an order block here, this bearish candle, right? This bearish candle, because it liquidated the candles before that, created an order block. That is why that's how I drew the zone. And an imbalance exists within these zones, within the zone of demand. So this is considered a valid demand zone. And I drew the zone from this bearish candlestick from wick to wick, from wick to wick. A supply zone is the same thing. You see an imbalance here. You see an imbalance here. And I drew the zone according to the candlestick before the imbalance, which is the order block. This right here, this bullish candlestick doji resulted an order block, and I drew the area, the box from wick to wick, from the upper wick to the lower wick. That's going to be the size of your zone. And it's an area where there's high selling pressure. That is the difference between supply and demand, but essentially is the same. Just know that supply is high selling pressure, demand is high buying pressure, and it's an area where there's institutions that entered or exited their trades and where imbalances exist. Support and resistance are specific price levels where you draw horizontal lines, just like I did here. At 33.15, it's a support level. At 33.75 is a resistance level. That is the difference. Now, what causes this? Well, what's the effect? Now, for the support and resistance, the effects are seen in price action where price bounced or rejected before. Here, price at this support level, price bounced up to the upside. Because if you look left, there's more activity going on here. Price was bouncing around this price level. Came back down, broke a structure, touched here again, created resistance. Now this resistance became a support. Resistance became a support. We have another touch here, another touch here. So this is a strong support level because price bounced to the upside. And keep in mind that your support can become a resistance when it's on a downtrend, and the resistance level can become a support when it's on an uptrend. And what I mean by that is that when you see price touching this specific price level at 33.75, eventually it's going to break up. Sorry about that. It's going to break above this price level. So price may break above, retest, and continue to the upside, and it will become a support level. So it can go from resistance to now support on an uptrend. And on a downtrend, it can go from support to resistance and continue to the downside. So eventually price may come down on a downtrend and break below 33.15 and create a resistance, just like it did here. And history repeats itself. History tends to repeat itself. So that's why it's very important to go back and backtest this information, to backtest this data, so you can train your eyes. It was once a support and it came below to break below this price level. It came back up to retest this price level and create a resistance here. And eventually broke above. Same thing can happen here. Now, this takes time. This takes repetition to train your eyes to spot the differences. The more you study this, you see this bullish candlestick was an imbalance. This is a huge imbalance candle, a huge bullish imbalance candle. And price eventually came down to fill this gap, to fill this gap. Now let's look at other markets. Let's look at Euro USD. Let's look for a demand zone. Now we see here a demand zone. We also see an order block. You see this is an imbalance. This bullish candle is an imbalance candle because it left a gap. See, it left a gap here and price is coming down to fill it, to fill this gap. And there's an order block right here. This bearish candle is an order block because buy orders were left open, creating a high buying pressure. So we can draw this demand zone from wick to wick, from this wick, from the upper wick to the lower wick. And you see price also liquidated this previous candle. You see price pushed down to liquidate this previous candle. So when you see this, it's a valid order block. So you want to spot liquidity and you want to spot break of structure before it's considered a valid order block. And you draw your zone. That is a demand zone. And we can also look for a support level. Support. Put one here. Can round it up to the nearest quarter level. And we can look back to see, you see here, there's touches here. There's touches here. It was once a resistance. Price was rejecting this price level and eventually broke above. And it came down to retest and created a support level. It's a specific price. 1.15825 on euro against the US dollar. And we see activity like this happening. When you look, you see here as well, we have a support. This is all support. We created another resistance here. So it was a support and then price broke below, it created resistance. So support became a resistance, 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 and eventually it broke above and came back down to retest. It created a support level. And we can look for a supply. We can also mark this level actually as another support level here. Boom. At 1.15975. Why? Because there's touches here. There's a touch here. There's a resistance here. And price broke above to retest. You can go back. There's touches here. It's almost a touch right here. And a touch here. You see? So when you spot This is called price action. This is all price action. When you see this activity going on, it's considered a support level. And there's high buying pressure within a zone and it left in an order block as well as an imbalance. Now you see price coming back down to fill this gap. And I'd like to show you guys live market analysis. This is live market analysis. And we can look for a supply zone here. Here's a good example. We have this imbalance here, left an imbalance. So we can draw a zone here. See now price reached this area and there's high selling pressure and it pushed price to the downside. I drew my zone from wick to wick from the previous candle, from wick to wick. So you want to look at the imbalanced candle. This candle right here is the imbalanced candle because it left a gap between these two candles. And the order block is right here because it liquidated the previous candles. This bearish candle liquidated the previous candles and pushed price down, creating an order block. And there are orders that are left not filled from sellers. Drew my zone. You see now price coming back up to this area. You see here we had at one point we had price coming back up and then push price down. Came back up again, push price down. And now it came back up to this area and it pushed price to the downside. So we had 3 touches. 3 different touches here, here, and here. It's high selling pressure. Now this is considered a supply. Supply zone. We can also spot a resistance. Can draw it here. Or we can just put it here as well. A specific price level because you see touches here, here. Give me a fake out here, but it's still it touched around this price. See another one here. We have activity going on here. Create a support here. You see how it went from support. It was bouncing around this price. It would bounce around this price. It was bouncing, and then eventually it broke below. It came up. to retest, came up again to retest, and it actually created a fake out. This is a this is a fake out right here. This two candlesticks here create a fake out to the upside. See how price was testing this resistance price. It was testing this resistance price, and price pushed up and it came back down. Touched here. And this is a candlestick confirmation, right? When you see these, this is a candlestick confirmation candle, resulting a bearish move. And we're going to talk about candlestick confirmation candles on our next step. On step 5, we're going to talk about confirmation candles. On step 5, to know whether or not to enter and to also use it as an indicator. When you study the confirmation candles, the candlestick confirmation candles, this is actually a tweezer top. This is called a tweezer top. And there are different confirmation candles, but when you see this tweezer top, when you have a bullish candle the same size as this bearish candle, it's a reversal candlestick pattern. When you see this tweezer top forming, you know that there's a reversal that's about to happen, and that's exactly what occurred. It occurred a reversal candle, a reversal move. That's exactly what happened. It occurred a reversal move to the downside. So we'll talk more about that on step 5. As of right now, we're just drawing our demand and supply zones and also our resistance and support levels. So price may continue to the downside. It may test around this area. It's good to look for buys around this area, but you don't want to go in right away. You still got to gather the rest of the steps. Just because, there's potential buys and potential sells around these areas, and you have your support and resistance zone levels, it does not mean that it's an entry price. It does not mean that there's a guarantee, entry. You still have to follow the rest of the steps. We still have to wait for break of structure. We still have to wait for liquidity. We still have to wait for confirmation candles. We still have to wait for time, and then we execute. So we have to go step by step. You see, we had, there's actually some liquidity build up here, and it broke above. We'll talk more about that on our next call. The third step is break of structure. It was break of structure. A break of structure happened here, and it's also liquidity. So whenever there's whenever there's break of structure, you're also wiping out liquidity. And we'll talk more about that on our next call. So as of right now, we identified our supply and demand zones. This is a resistance level. This is our support level. And just keep in mind that a resistance can become a support on an uptrend, and support can become a resistance on a downtrend whenever there's a break of structure. And we'll talk more about that on our next call. Like I said, break of structure retest. We'll talk about how price can break these structures, can break the resistance, can break a support level, and can create a this. Think about this, and we'll talk more about this on our next call. When you see a resistance level, you hit a ceiling. Price is rejecting that that price level. It's rejecting that ceiling. It's trying to break above, but then it breaks above the ceiling, and it creates a new floor. It creates a support. And now the resistance becomes a support on an uptrend. When it finally breaks above this area, it creates a support. And when price breaks below this area, it creates a resistance on a downtrend. So when you're ceiling, your resistance is your ceiling, you break above that ceiling. Now you're on the second floor. Now your new floor, uh, your resistance, your ceiling, you break above that ceiling. Now you're on the second floor, and now your ceiling becomes your new floor. And when you're trying to go to the downside, when you go from second floor to the first floor, you break below your floor, you break below your support. Now your floor, I'm sorry, your floor, your floor now becomes a new ceiling. It becomes resistance. Here, you see this was once your floor, you break below, now your floor becomes the new ceiling, and vice versa. When you break above your floor now becomes your ceiling. When you break above your ceiling now becomes the new floor. And we'll go more about this. We'll talk more about this on our next step. So you guys don't have to worry about that right now. I just want to I just wanted to point that out. Just a quick introduction. But anyways, so here we identify our resistance and support levels and supply and demand zones. Let's try one more example and we'll end it here. So we have the US dollar against the Japanese yen. We see an imbalance here. We can draw out our supply zone from this wick, this order block here. Can draw it out. See here, we also have our demand zone here. You see this order block. This is an imbalance candle because it left a gap. You see? So we can draw this demand zone. It also liquidated here. Came down, pushed up. Yeah, that's good. So this could be considered our demand zone, supply zone, demand zone. Can draw out our support levels. Support level here. Yeah, touches here. Touches here. It was once a resistance, broke above, came back down, created support. So it was once my ceiling, broke above my ceiling, and created a new floor here. Bounced up, touched here as well. Here, it's a lot of activity going on here. So this is a strong support level. And then we have our resistance around here. It's a strong resistance level. See here, here, here. It was a resistance level. See, we have a lot of activity going on here and here. It was a strong resistance level, broke above, came back to retest, broke below, it came back up to retest. Oops. So this is a strong resistance level and support level. Oh, sorry about that. It's resistance, resistance level. So there you go, guys. Now, remember, support, resistance are reaction levels where price turned before. And supply and demand zones are origin zones where big players entered or exited and imbalances exist or order blocks exist. Those are the key differences. Support and resistance levels are more commonly used by retail traders, whereas supply and demand zones, they are focused, institutional traders, they focus on order flows and imbalances. Supply and demand zones, supply and demand zones focuses on institutional order flows and imbalances. Those are the key differences. And the more you study this, the more you guys will spot this. So I appreciate you guys for tuning in. Thank you for listening. Keep practicing, keep studying. If you guys rewatch this video, if you guys don't hasn't clicked yet, rewatch it over and over again until you guys understand it. And if you guys have any questions, please feel free to reach out to me or comment uh, in the comment section. You guys can comment, ask a question. I'll be more than happy to answer your questions. Or if you guys need a one-on-one tutoring or one-on-one mentorship, feel free to email me or reach out to me. I have my information in my bio under description. I have several links. You guys can schedule a call with me. We can talk more about this. But this is just a quick introduction. This is just just covering the basics and going over the differences between supply and demand zones and resistance and support levels. So thank you guys for listening in. Please like and subscribe. And I hope you guys got some value. Until next time, God bless.